Good afternoon. This is Clay Neves, Vice President of Student Enrollment here at Universal Accounting Center. And today we're going to talk about the economics of premier accounting services. Those things that you should be providing your clients that will drive the greatest value and profitability into your service. We're going to talk about how you can do that by focusing not so much on just reporting their past, but also focusing more on how you can shape their future. We're going to talk about some principles and the services that you should be focusing on to make sure you're maximizing your value to your clients and being more to them than just an accountant or a bookkeeper, but a valued, almost indispensable business advisor and consultant. Let's talk about some things first that go counter to this that small business owners often get trapped into. Let's look at 4 strategies that will guarantee that you remain overworked and underpaid. As I go around the country and I've done seminars for business owners, I'll ask them to raise their hands and if they feel they're overworked and underpaid, and usually almost all the hands in the room go up. And as we get into it, it's because they're religiously following these 4 strategies. Smiles come to their faces as I talk to them about why they should follow the strategies we're going to discuss today, drop these strategies, and how it will affect their life. And this can happen to an accountant also because you're in business. You are trying to build your own service and can very easily get trapped into these as well. So let's start with the first one, which is you are your business. In other words, you follow the strategy that says, if I do everything myself, I will be more profitable. If I do everything myself, I can eliminate costs and therefore be more profitable. You need to drop this one and drop it quickly. Now, that doesn't mean that initially it makes sense that you shouldn't do everything. There is a time when you start up where perhaps that is the best option for you. But understand that in your business there are separate roles. Michael Gerber in his book, The E-Myth, writes about 3 different roles in the company. He calls them the entrepreneur, the manager, and the technician. We've kind of equated those in our book In the Black to these 3 areas. The manager we equate to the accounting side of the business, the entrepreneur to the marketing side of the business, and the technician to the production side of the business. So if we combine those together, then everybody that gets into business, if they start on their own, they handle the marketing, the accounting, and the production in their own business. Now, the marketing is those activities that bring a potential client to you. It's the promise of what you deliver and what you say you do. The production end of things, that's the part of the business that provides, delivers on the promises that were made in marketing. And then you have the management or accounting side of the business that keeps track of all the expenses and transactions so that you can understand if you're doing this attracting and providing, attracting and delivering profitably, and how to even improve your profitability. Now, you may be filling all 3 of those roles, but don't forget that there are different roles. And as you go forward, try to understand which of those roles you do best and drive the most value to your company. And look at delegating the others to people who may be better than you in those particular areas, so that all 3 areas are being done by people who can maximize their value in those areas. Now, there are some activities that don't cost a lot to do, but free up a lot of your time, and we'll talk about those a little more. But understand this principle. And I had a cabinet maker who was in my house. We hoped that he'd get the cabinets done by the weekend because we had a party planned. And late Thursday evening, he informed me that he would not be in on Friday to finish because Friday was Books Day. Well, I was a little bit concerned because we were going to find ourselves without a kitchen and a party, and that was going to be a little bit inconvenient for us. But I asked him, what do you mean by Books Day? He has to spend all day Friday doing his books, and he does those himself, he says, because he can't afford a bookkeeper. I said, oh, things must be slow then if you have time to do your own books. He said, well, I really don't. I've got about a 3 to 4 week backlog of work that I'm not getting to, but I've got to get my books done. And I asked him why he doesn't hire a bookkeeper. He said, I can't afford one. And I said, how much do you make an hour when you put cabinets in? And he said, it's about $100 to $150 every time every hour I'm working putting cabinets in. And then I asked him again, why don't you hire a bookkeeper? And about midway through the sentence of telling me I can't afford one, it hit him like a 2x4 across the face. And he realized what he'd been doing. How many times are you doing this to yourself? Penny wise, pound foolish. You're straining at pennies, moving past dollars to reach for pennies. By doing things yourself that are of low value, that you could easily convert that time you're spending to more highly valuable and more highly lucrative activities, and be further ahead by paying somebody just a little bit for that time who can get it done. So think about that. Think of the roles in your business and identify the ones that you are the best at and drive the most value with. Is it marketing? Is it the accounting part, which in your business is the same as the production? But ask yourself, where do I drive the most value? And help your clients do that too. It's all about the work. Another very important thing to consider is the fact that it's not just doing the work, but it's working on the work that is important. As a business owner, it's important that you not only work in your business, but on your business, that you're constantly looking at the processes that you're doing and spending a little bit of your time improving them so that you can do more work in less time and be more efficient, more effective, and more profitable. Another trap we get into is saying that no one can do it better than we can. Again, this is akin to the first one, and that might be true. We might be able to do even the most menial task better than anybody else can. But if it's taking us away from doing what we do best, if it's taking us away from doing what we are most valuable in doing, it's costing us, and costing us dearly. So even if nobody can do it better than you, if they can do it good enough to free you up to spend more time driving value for your clients, you need to do it. Lastly, we get in the trap of selling our time. Most potential clients think that's how accountants bill. They'll ask us, well, what's your hourly rate? And we'll tell them, whatever, $50, $40. We're almost always undercutting it ourselves in our mind. We have a hard time understanding how our time could possibly be worth $50 an hour, particularly if we've come from a career or a job where we've made $20 an hour, let's say. So it's very, very easy for them to say $50 an hour. Well, I could hire somebody to do it at 20. Now we cut it down to 30. And now we're bringing on a client at $30 an hour that we'll have the rest of our life, that will keep us overworked and underpaid. Another problem with selling your time is that when you quote them an hourly rate, they usually multiply it by the time they think it will take you to do the work. And if they've been doing it themselves, you're in a real pickle, because they will undoubtedly be going through this calculation in their mind when you quote them $50 an hour. Wow, $50 an hour. It takes me, what, $20 hours a month to do my books? Let's see, $50 an hour times 20, that's $1,000 a month. I can't afford that. Now, that whole calculation has been going on in their brain silently. You don't see it happening, but you see it in their eyes when they look at you and say, no, I got my accounting taken care of, I'm fine. They've just calculated you out of feasibility. Now, what's the better way? We're going to talk about how to sell value. We're going to talk about ways around that so that you're using the psychology of it in your favor, where they are not conditioned to be able to negotiate it with you, and where if you need to negotiate, you negotiate on scope of work and not the equivalent of your hourly rate. So we'll talk about that. But those are 4 strategies that you can get trapped into that will guarantee that you stay overworked and underpaid. So what are the ways to really assure our practice grows profitably? Let's talk about them. Differentiate. What is it that makes you unique? What is it that makes you different? Nobody else has read the same books that you have read, the same combination of books, or gone to the same combination of seminars or training sessions, or had the same college instructors, or had the same combination of life experience, or the same combination of achievements in your career. You really bring a unique perspective and a unique combination of knowledge to every client that you approach. And you need to think this through and identify what differentiates you and makes you special. Second of all, look at all of those things that you've done and maximize your value. Pick the ones that you feel really drive the value to your clients. What are the things that you have done that make you most unique and give you the greatest competitive advantage? What are the things that you have done and accomplished in your career that make you better than, say, 95, 98% of the people out there in that one thing? And try to understand what that is for you. Look at your business and look at the things that you're offering your clients. What are the things that drive the most revenue into your business that can make the biggest difference in the shortest period of time? Focus there. Then make sure to delegate the rest. Delegate those things that aren't maximizing your value. Remember to work on your practice, not just in it. Look at the work that you're doing, but look at how you're doing it. Constantly be thinking of better ways, testing better ways, documenting better ways, validating better ways, and implementing them into your overall process so that as time goes on, you get better and better at marketing and providing what it is you promise your clients you'll deliver. And then as you grow, be very careful about how you balance your staff and your workload. We're going to talk about that a little more because there are things that take up a lot of time that we can easily delegate at a very low cost. Those leverage points are what will really make the difference, and we'll talk about those. First of all, let's talk about the principle of commodity versus a unique value proposition or a specialty. Here I've got an example that I could think of, and that is corn. I've got it on one side, it's a commodity, and that's usually in its natural state. Things that are very common become a commodity. Things that we take in their natural state that really don't have any value added there. And they're very price sensitive. In fact, a few percentage points can drive you right out of the marketplace because it's almost always just a matter of price, depending on that determines who gets that business. We have the other side, though, the unique value proposition, where we take the commodity, We add value to it. We make it something unique, something special that entails our strength. And in this particular case, we turned the commodity of corn into the unique value proposition of corn flakes. Now, which side of the equation, pound for pound, is most valuable? Are people willing to pay more for it? And if you look at it pound for pound every time, the corn flakes are very much more profitable than selling the commodity. So how do we relate this then to the accounting industry? Well, are you the commodity or are you a profit and growth expert? You may have experienced this when you talk to people about who you are and what you do, and if you use the A word, we call it, accountant, not that that's a bad word, it's a great word. It gives you a lot of respect. You know, when you're an accountant, people think you're a professional, all of that. The problem is, when you're talking to a small business owner about accounting, they've already made a conditioned response in their head how they will respond to it. And it's basically this. Oh, you're an accountant. I know what you do. I can't afford it, and I don't need it. First of all, they don't really understand what accounting is. They know it has something to do with numbers and reports, but because they're not familiar with accounting, most business owners come from a production background. A plumber gets into plumbing because he's been a plumber. Not many people get into a plumbing business because they think that the accounting in a plumbing business is the fun part. And so most of them come from production, and when they hear the word accounting, and I hope I'm not offending anybody when I talk about this, but it's the most poignant way I can put it across how small business owners feel about accounting. They feel about accounting the way that, let's say, a 50 to 55-year-old man may feel about getting a colonoscopy. They know that it's something good. They know that they should do it, but they don't really want to think about it. It might just be too scary. It might just be too painful. And so they'll delay it. They'll put it off. They won't want to talk about it. And they'll tell you everything's okay. They'll tell you they have their accounting in order. But here's what they really mean. I take my orange crate full of documents, transactional documentation that accumulates over the year, once a year to my tax accountant. He organizes all of that, makes me my financials for the year so that I can file my tax return. He gives that to me in a nice binder. I look at what I owe, I write a check, I pay the IRS, and then I put the rest of it on a shelf and don't look at it. That's what most small business owners are meaning when they say, I've got my accounting taken care of. And that comes from experience in working with small business owner after small business owner. I'm shocked and amazed that they stay in business as long as they do, only doing their accounting once a year. They think that maybe running their business off of a couple of Excel spreadsheets in their bank, their checkbook register is good enough. What do you mean I'm broke? I've got a balance in the bank. Well, there's more to it than that, and we know. So let's stay away from the A word. Let's look at talking about what we do in ways where they haven't built up a competitive or a conditioned response. And when you're talking about something that somebody has not developed a conditioned response to, they have to listen to you. If I call you and talk about long-distance services, the minute you hear the word long-distance is the minute that you say, I don't need it, because you've been approached that way over and over again. You now have a conditioned response to the person calling, offering you long distance. It's the same with small business owners. But if we come at it from a little different angle, one they haven't heard before, one they haven't built a conditioned response to, profit and growth expert, for example, they have to listen. So we want to specialize and make sure that's how we drive value in our accounting practice. W. Edwards Deming, quality guru in the late 60s, early 70s, the person responsible for turning made in Japan from a slur into an accolade, introduced the concept of what we call the wisdom pyramid. He said, in order to understand really how to do things the best and most efficient, most effective, most profitable way, we have to start with the data of the business. And we have to take that data and we have to formulate it into information. And we have to take that information then and we have to look at it for patterns. We have to look at it for knowledge that we can gain from it. And as we repeat that process of going to the data, creating information, getting knowledge from it, comparing it to past, over time we gain wisdom, which is that instinct, the knowing, if you will, of exactly what to do in exact situations that can only come from going through and climbing the wisdom pyramid over and over again in your business. Well, if we look at how that takes place, it's very much a function of accounting. So let's look at it from the perspective of the accounting world. First of all, we have the clerical functions, taking the transactional documentation, entering it into a system. Hopefully none of you are still using manual systems with the time saving that computerized systems provide, and doing some processing on that. That's at a clerical level. Now the person that oversees all that data collection, that data entry, and the data processing, and takes all of that data and produces the actual reports, the balance sheet, the income statement, the statement of cash flows, etc. That's the bookkeeper. The bookkeeper produces the reports. Now, unfortunately, in our industry, that's where too many people stop. This is reporting the past. All we're doing when we produce reports is looking at what has happened, the history. Granted, that's important, but it's not the end. It's the means to the end. It's not the most valuable thing. It is valuable, but it is not the most valuable thing. Why do we produce financial reports other than to do taxes? We produce financial reports so that we can understand what's going on in our business. Accounting is the language of business, and without accounting, we don't understand what our business is telling us to do as business owners in order to make it more efficient, more effective, more profitable, and to grow it. Well, that's done through the accountant level, the advisory level, where we take the reports, analyze them, consult on them, and build wisdom. Now, if you look at this, where do you drive the most value to your clients? Let's look at the clerical level. What takes the most time in terms of putting together this process of being able to sit down with the client and consult with them on an hour on their financial statements? The part that takes the most of your time is the clerical functions. And yet look at those functions. They may take the most time, but they also are the most commoditized. They are the ones that are the easiest to replace, the easiest to train somebody else to do. And they drive the least amount of all three. They drive the least amount of value for our client. So, if you want to think about leveraging your time and look at ways that you can do that, the first step you might want to look at is replacing the bulk of time in the process that you may be taking now to do all the clerical functions yourself, and even bring in somebody or hire somebody at a lower level to do those for you, freeing up your time to do the more high-value functions of consulting with clients In other words, working on the key to profitability in the accounting practice, which is retention, and the marketing aspect of it. The thing that will keep your accounting practice growing, the marketing, the attraction of new clients. Those are the most important areas that you could be spending your time. And if you're spending 80% of your time, 70% of your time, even 60% of your time doing the clerical functions, that you can hire somebody that doesn't have the ability to drive that value that you do, and you can replace your time with theirs so that you can reallocate your time to higher value functions, your whole business will begin to thrive. I hope you get the economic significance of what we're talking about there. Let's talk about it a little deeper as we look at the power of analysis and recommendations with your clients. I want to give you a living, breathing example here. It's a basic economic model of business where we have the price curves, we have the cost curves, and we have the break-even point. We all know that there are those functions of business that are fixed. Leasing space, for example, doesn't depend upon the number of units that you sell. It just depends on the fact that a month goes by and you owe the lease payment. Well, if you want to look at the total cost curve, then you add on top of your fixed costs, you add your variable costs. And there is your cost curve, represented here by the red line. Now, how do you make profit then? Well, you have to start selling and making revenue against those sales to offset the costs. And so we have our cost curve. And hopefully we price things right so that our break-even point, which is represented by the crossover of those two, the intersection of the total cost curve and the revenue curve, we hope we're making enough sales there to bring in some profit, represented here by the triangle. Now, a lot of small business owners in this particular situation then will say, I'm not making a lot of profit. I guess what I need to do is make more sales. I need more marketing. I need to invest more in marketing. Does anybody see a problem with that? Number one, he's making very little profit to invest. Secondly, with this cost and price structure, with his break-even where it is, he's not making very much profit per incremental sale that he makes. So what would be a better way to do this? And we could consult with our client to say, look, based on what you've got, I think that what we can do to help you with this is, I think, looking over your financials, I think I found about 10% that we could cut out of your fixed costs every month to bring that cost curve down. I also can recommend a couple of suppliers that are just as good as the ones you're using, but I think we can cut out about 10% of your cost per unit, bringing down your variable costs. And at the same time, I also think you're pricing way too low. In the marketplace, I see people that are pricing it higher. I think you can get away with it. So I'd also recommend that we increase our pricing by 10%. And that's how you coach your client. Well, let's see what that does for their profitability. And imagine being able to show them this. We take down their fixed costs, that we lower their variable costs by 10%. We increase their revenue or their price per unit by 10%. Look what that does for their break-even. How far it pushes, how few units now that they have to sell in order to start making a profit. And look at how much more profitable they are. Now, we've done a couple of really important things here too. Because we've cut costs, we now have money to spend and invest in more marketing. And because we make more per sale, we can justify more investment in marketing than we could before. So now we invest in marketing, now we get more sales, Now look at the incremental profit on each unit. His business is really doing well. One example. Now, let's go to the basic economic question of business then. If I spend $1 over here, because in business, in order to make money, you've got to spend money. If I spend $1 here, how much can it pay over here? Well, that's the question. Put this to your client sometimes. Take in a wad of, or a stack of bills, and just let them know this is what you do for them. I make sure that if you put down $1 on this side for expenses, that we're maximizing what you're getting back on that $1 over here. How do we do that? We break down every expense and we hold it accountable for return on investment by client. Do you have clients that aren't profitable, that take up so much of your time you'd be better off without them? Do you have you done that by product, by vendor, by employee, by department, by advertising source? It's amazing to me how many people I've seen spend thousands of dollars, for example, at not so much anymore, but Yellow Pages or other advertising sources, and they're doing nothing to keep source documentation on incoming business so that they can hold their advertising sources accountable. But the same goes for employees, the same goes for vendors, the same goes for product. Anyway, you break these down, and then it's a matter of looking at each of them, interpreting the data, and saying, where can we minimize or lessen our investment in areas that aren't bringing us back a return, and reallocate those dollars now to high return areas and invest it there instead. It's an amazing thing how quickly you can turn around or increase profitability for your clients by breaking it down and helping them understand what you do in very simple ways that get them excited about what you do, and they can see the value. One of the other things that we offer is BizBench, which are benchmarking reports. They take a business based on data that you input into the platform from the balance sheet and the income statement, and then it benchmarks that data in 50 key metrics and ratios against industry standards for similar businesses of similar size in the same industry throughout the United States and Canada. We run this against the very respected RMA database, a very comprehensive database of financial data the RMA members submit to banks, lending institutions, where they have actual data from actual businesses that we run this against. Hundreds of thousands of businesses throughout the United States and Canada to set the benchmarks with. It also comes with an explanation of those metrics, what they mean to the business owners, so that you can pick and choose the ones that are most relevant to the business owner, the ones that they would understand the best and would have the most meaning to them. It charts and graphs how they compare to industry standards in every one of these categories. Here's an example of the data from the income statement, just 5 of the up to 50 key metrics that we help them understand how they come in. And you can see that there's areas where they'll see that they're above the industry standard, but there's areas that they'll see they're below the industry standard. And the most important thing, it comes with a comprehensive list of recommendations in each of the areas that they are below the industry standard, so that you have a long-term action plan that you can put in place to enhance your retention, to build your value with your client, and most importantly, to help them be more profitable. And as the year ensues and you compare each month's financial statements to the benchmark, and they can see how they are growing in each area, you won't have to convince them that what you're doing for them is worth it. You will become indispensable. very highly differentiated and certainly not a commodity. You're doing much more than just reporting their past. You are shaping their future. One of the things that can differentiate you too, and would love to help you with any of these, if you're feeling that they would help you, our professional bookkeeper course, of course, comes with the professional bookkeeper certification. Our professional bookkeeper's guide to QuickBooks course comes with the QuickBooks specialist certification, and the professional tax preparer course, of course, comes with the professional tax preparer certification. All of which we give you the logos to. You can put them on the card. Not a lot of people that you talk to are going to have heard of these, particularly small business owners. But that's okay, because as you market yourself, you'll be able to explain to them that these mean that a third-party respected corporation, Universal Accounting Center, has trained me and certified that I know A to Z how to do small business accounting for you. Number two, that they can certify that I know how to handle your QuickBooks needs from A to Z. And number three, that I can not only prepare your taxes, but help you plan to minimize your tax liability throughout the year. In other words, what we need to do is talk about what we do in different ways. We take shoebox to financials to create wealth. As a Chamber of Commerce president, I held many networking events, and in fact taught many seminars on networking and how to do the 30-second commercial to make sure that you get referrals. Well, again, we need to stay away from the A word, and it was very typical for accountants to stand up and say, "My name's John Smith, I'm an accountant, I can take care of all your accounting needs." If this sounds familiar, don't wince, please. We'll get you over it. So if you have any accounting needs, pass me a card. Of course, I'd watch as no cards got passed. Well, one of the ways that we taught them to do this, one particular accountant I worked with began to get a lot more referrals and business after he changed it. We came up with this little goodie. He would bring in a shoebox, much like the one you see here, beaten up but full of paper. He would bring in some statements, financial statements that were very beautiful, well organized, very good to look at. And he would bring in a wad of cash. And when his turn came to do his 30-second commercial, he'd stand up and say, "Hi, my name's John Smith, and I work with small business owners like you who want to minimize their taxes, maximize their profits, and optimize their cash flow so that they have money in the bank to operate and grow their business when they need it. In other words, I take this," and he'd hold up the shoebox, "to create these, holding up the financial statements, so that you can make much more of this." And then he'd hold up the stack or wad of cash. If that's of any interest to any of you business owners, please hand me a card. And he would get a lot of referrals and a lot of cards using something that, and notice that nowhere in there do we use the word accountant. But we're describing in very easy terms for them to understand, and in a new way that they have to think about and listen to, what it is we do and the value that we drive for their business. Another way to say it is, if we can't save you and make you multiples more than our reasonable fees, let's not do business. Once they understand that that's what we help them do, not just report the past, but help them shape their future, we start to drive our value. And the value in this business is great, particularly if we can show them the value that we're driving for them each month. If we can show them that because they're paying us $300 or $400 per month, we've increased their business $5,000 to $10,000 to $15,000 to $20,000 a month, we don't have to argue with them about the value of paying us that each month. And on average, that's about what we found, that every client's worth about $300 to $400 per month on average. Some will be more, some will be much less. It's up to you which ones you accept and don't accept. But at average, that's about $4,000 to $5,000 per year. According to AI CPA studies for small firms of 5 employees or less, the average small business client retains about 6 to 7 years. That's a $24,000 to $30,000 lifetime value for somebody who comes on as your client. Are they worth it? Are they worth keeping? Are they worth driving value for? Yes. Makes all the difference in the world. So how much is your time worth? You know, it depends on how well you drive value. You've got to get off that concept that you are selling them your time. You're selling them the value. And the better you get at providing that value in more efficient and less time costly ways, the greater your effective hourly rate will go up, and you will benefit. One of the biggest problems about charging hourlies is that when you get a client and you bring them on, the first month you're getting used to it and it takes you a little longer. But after you've done their books for a while, you get better and better at doing it in less and less time. And if you're billing hourly, you are, by becoming efficient, making less and less and less off that client. Now you're still driving the same amount of value to him. He's still getting the same books. He's still getting the same reports. He's still getting the consultation, and maybe even better consultation than he did before. But your income from that client continues to go down as you get better. Not a good way to do it. By value pricing, when you become more efficient, you benefit. And that's who should benefit if you're working to be more efficient. Look at a monthly fee instead of an hourly fee, a flat monthly fee. Quantify the value that you're giving them, not the number of hours that it takes you to do it. One of the key leverage points you will have in negotiating and maintaining your clients is to never disclose to them how many hours it takes you to do their work. Concentrate, focus them on the value you provide, not how long it takes you to provide it. That's irrelevant to them, or should be. Negotiate on the scope of work, not your hourly rate. If at the end you quote them a monthly fee of, let's say that average $400, and they wince, and they say, oh, I can't really afford anything over $300, fine. Of the services that we talked about, which can we delegate back to you so that we can get that monthly fee down to what you can afford? And usually if you're taking services out, and that's how you're negotiating down your monthly rate, they will see that they really don't want to do that work and are more likely to agree for you to do it and give it back to you. And when you can make your payments automatic, it's the best way to do it. So let's look at some strategies then that will help you in growing your practice, in differentiating yourself, in driving more value, and in doing more than just reporting their past, but in helping them shape their future. One of the things to remember is that there's only really 2 ways to grow your practice, and that is you either have to increase the number of clients or you have to increase your revenue per client. Best of all is doing both of those simultaneously. And don't forget a couple of strategies here that may seem counterintuitive. Number 1, you ought to be firing your least profitable clients on a regular basis. They may be profitable, but if they're your least profitable, they are taking up the opportunity cost of finding a more profitable client. Certainly any client that isn't profitable should be weeded out. Refer them to somebody else. Make sure they're taken care of, yes, but remember, you're maximizing your value. Secondly, as you differentiate yourself, you will be able to take care of both of these things simultaneously. You'll attract more new clients, and they'll be more willing to pay more for your services. And you'll probably be able to make them happier over time, which also helps with the key to profitability in this business, and that is retention of profitable clients. Look at your unique value proposition and identify who it is that benefits from that the most. One good way to do this is look at your clients, the ones that you would most like to duplicate, and add more clients to your client base that are just like them. Give them a call. Ask them why they went with you over other accounts when they first got into the relationship. What was it they saw in you? And why did they stay with you? And let them talk. Listen to what they say. Write it down word for word. They may tell you things about yourself you don't even know. They may see strengths about you you're not even aware of. But call a few of them. And when you do, you will have their verbiage to be able to work on a 30-second commercial that will resonate with people like your best clients to attract them. Who are those people? Just again, look at your clients that you most want to duplicate. Look at the profile and look for similar clients as you grow. Then set your revenue goal. If you're not where you want to be, where do you want to be? And set a time frame for being there. Some day is not a goal, something is not a goal, and some time is not a deadline. A goal must have a deadline to be really motivated. So one of the things you want to look at is, number one, what it is you want to do. Say I want to increase my annualized billings to $50,000 within the next 10 months. That means I have to pick up one new client at around $400 a month, or about $5,000 a year, in order to do that. Over the next 10 months, every month I have to pick up a $400 client, and you can get there. Calculate the revenue per client that is necessary, the target that you're looking for, and then it's just a matter of understanding, like I just did, how many new clients per month you have to get. And then set out doing that each and every month between now and the time that your deadline comes, and you will get there. Select the marketing methods that really go to your strengths. One strength that you cannot get away from in this business is face-to-face. We're still a relationship-oriented business. People like to meet with you. They like to know you in order to trust you. And you'll know things about their business that they might not even know. And that's why it's so important to get an accountant that you can trust. But look at the marketing methods. You might not be good 1 on 10. So seminars might not be the best way for you to go. You might be better one-on-one. Look at networking opportunities. Look at other ways. Look at referrals. Look at some of the other ways that we can help coach you on. But set results benchmarks for yourself. Again, I need to talk to X number of people in order to get X number of appointments, in order to actually meet with X number of people, in order to get X number of them to become clients at X average per client in billings. And then as you go forward, you'll know what these result benchmarks are as you keep track of your activity. And over the course of a year, you'll know exactly how many people you have to contact to get a new client. And then just set your process in place whenever you need to get more clients. And as you do this, always be working on the process as well. Think of new ways to do it. Test it out and validate it. And once you've validated the spend or validated investing in that, your time or your money in that particular marketing channel, in other words, think big, start small, test, 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 but once you validate that, duplicate it and grow it. That's a good solid strategy for building. And then all you have to do is over time you eliminate the non-productive methods, the ones that aren't working, and you improve and expand the productive methods that do, and your business will continually get more and more value-driven. You'll be doing a better and better job for your clients. They'll be happier and paying you more and more over time and staying with you longer and longer. And you will have a premier accounting service offering premier accounting services where you are the most highly respected, needed advisor, almost indispensable to their business, if not so. And that's the way to do it. So just remember, focus on not just reporting their past, but by driving higher value activities, higher value products and service that also help shape their future. And in doing so, you'll shape your own. And that is the economics of a premier accounting service. Thank you for your time today. If you have any questions, feel free to email me at clay@universalaccounting.com. We'll be happy to answer any of your questions for you, or if you needed clarification on anything you heard today, that would be great. clay@universalaccounting.com. Excuse me. Thank you.